Welcome back to the cryptoworld channel, everyone. My name is Josh, and in this video, I'll be taking a closer look at this crash that we've been in over the past few weeks and comparing it to previous crashes on the charts to see what we could possibly expect Bitcoin to do next. Also, the Bitcoin Fear and Greed Index has plunged further into fear, and later in this video, I'll be talking about whether or not we're in a bull market or a bear market and how to tell the difference between the two. All of that and more in this video, so definitely stick around all the way to the end of this video so that you're not missing out on any of this important information. And just before we jump into it, make sure to leave a like on the video down below. And if you're new to the channel, you might as well subscribe with notifications turned on for more updates just like this every single day. But with all of that out of the way, let's get straight into what this video is about. So right here on the Bitcoin US dollar chart on the daily time frame. And now these measurements are slightly different depending on what exchange you're looking at. But on this chart just here, the total crash from all-time high to the bottom of this week so far has been a dump of around 37% to the downside. So close to 40%. And obviously with a move like that, there's a lot of people panicking, mostly the people that got in at these all-time high prices, which is obviously a very normal reaction if you did end up getting in at these prices for the first time. But despite this crash being a pretty substantial crash for Bitcoin, it is definitely not the worst Bitcoin has experienced. And in fact, pullbacks like this are very normal during a bull market. You don't have to take my word for it. Let's take a look at the numbers. Take a look at the chart. For example, during the 2017 bull market, of course, we cannot argue against the fact that really 2016 and 2017 was a massive bull markets for Bitcoin and really the entire crypto market. And when you're zooming in closer to the 2016 to 2017 bull market, we can see here that multiple times throughout that entire bull market, we saw huge crashes back to the downside. And just about every single one of these corrections were between 30 to 40% and some even bigger than 40%. For example, this first one during the middle of 2016, that was around a 40% crash. This next one here, that was around a 35% crash. And then we had a 33% crash followed by another 40% crash, another 40% crash, and then another 30% crash. So this simply proves to us that a 30 to 40% crash is in fact perfectly normal even during a bull market. And we actually have another extreme example of a crash during the middle of a bull market, and that was during the 2013 bull market. As you can see, once again, 2013 was a time period where I'm sure we cannot deny Bitcoin was in a bull market, but in the middle of the 2013 bull market, Bitcoin crashed over 75% to the downside. And that's when you're taking a look at this low right here. But when you're taking a look at the bottom of these weeks, then that was around an 80% crash in the middle of a bull market. Now, how is it possible that Bitcoin could experience crashes of this size and still be classified as being in a bull market? Well, let's just go back to basics and take a look at the actual definition of a bear market, which is when a market experiences prolonged price declines. That is a definition that we can use for crypto, but we also have an additional bear market definition, which is when the price of securities, also known as the stock market, falls by 20% or more from the recent highs. And right now, securities, aka the stock market, has not fallen by 20% or more, and both the crypto market and the stock market have not experienced a prolonged price decline. Even though it might feel like that's the case when we're in the middle of the bearish price action, you have to keep in mind that this bearish price action hasn't even been going for 1 month. Compared to the 2016 to 2017 bull market, this first example of a crash to the downside that we had a look at in the middle of this bull market lasted for around 1.5 months, and the recovery back to the upside lasted for another 2 to 3 months before we finally started recovering back to the previous high. And that was also the case with some of these other crashes. For example, this one just here lasted for over a month in length. So when you're looking at the bear market definition of a prolonged price decline, and when you're looking at this price action and considering the fact that we know that this was not a bear market, we can begin to adjust the threshold of what might be a bear market or what might not be a bear market. And at least when you're using the data from 2017, 1 month worth of bearish price action does not mean a bear market. So as of right now, this crash to the downside, even though once again it is a substantial crash to the downside, it does not confirm we're in a bear market. And just the fact that we're still forming higher lows on the daily chart and higher highs, that's just another reason that is still pointing towards a bull market. Because let's be honest here, out of all of this price action, the prolonged trends in the market have been bullish trends. The bullish price action, believe it or not, has lasted longer in this bull market so far than any sort of bearish price action. And on top of all of that, the fact that we broke into a new all-time high, even though we didn't break far above the previous all-time high, we still put in a new all-time high, which does not happen in a bear market. A break into a new all-time high is a sign of a bull market. And by the way, none of this is just my opinion. This is what the data says, this is what the charts say, and this is what the definitions say. A lot of you have been asking recently, what what I'll be looking out for a potential bear market forming. And one of the main indicators of a bear market is when we start putting in macro lower lows and macro lower highs. So by macro, I mean on the daily chart, the weekly charts, and even the monthly charts, which as of right now, once again, we are not doing. But if that does happen, then that is when I would consider something like a bear market. Now, taking a quick look at the Bitcoin Fear and Greed Index, because since yesterday, this index has plunged further into extreme fear. This is making me even more bullish on Bitcoin for the longer term. And right now, I am personally accumulating a lot of Bitcoin. Of course, that's not financial advice. That's just telling you what I am doing. Because taking a look at this chart just here, the subscribers already know about this chart. But for the new viewers on the channel, these green zones on the charts are the time periods where the Bitcoin Fear and Greed Index was sitting in extreme fear. And as you can see, all of these areas so far where we were sitting in extreme fear have been amazing buying opportunities for the longer term. But it's important to remain patient and not necessarily expect a recovery overnight. Recoveries back to the upside after a move like this can last for quite some time. And historically speaking, for example, taking a look at the corrections that happened during the 2017 bull market, the majority of those crashes recovered back up to their previous highs within about 1 month after the bottom took place. But when you're factoring in both the bearish price action and the recovery back to the upside, so basically measuring from the high up to the point where we recovered back up towards that high, the majority of these corrections lasted for around 2 months from start to finish. Not to mention that the daily RSI on the Bitcoin chart is getting very close to oversold territories, and historically speaking, that has meant a great buying opportunity. Of course, not financial advice once again, but taking a look at the last couple times where we have reached into oversold territories on the daily RSI, both of those times have proven to be amazing buying opportunities. But one thing that's forming on the chart that you need to be keeping an eye on, and I did mention yesterday on the channel, but I'll mention it again for the new viewers on the channel, that is a potential head and shoulders pattern that is forming on the daily chart. As you can see, we've already formed the left shoulder as the head, but we have not formed the right shoulder just yet. So I want to make it clear that this pattern is not confirmed. We would still need to form that right shoulder and a break below the neckline in order for this pattern to actually be confirmed. And if it does end up confirming, then yes, that would be a very bearish signal. But right now, it's just something to keep an eye on because it's not actually guaranteed that we will end up forming that pattern. And just quickly hiding my face cam here so you can see the VP/VR indicator. As you can see, we've got a huge cluster of volume coming in down here in between around 41,000 US dollars all the way down towards around 32,000 US dollars. So from 41K to 32K is a massive range of support for Bitcoin. And of course, that has been where Bitcoin has recently bounced from, close to 41 to 42,000. And that previous September low was coming in at around 39,000 US dollars. And so it's incredibly important that Bitcoin remains above these sort of levels, because as I said earlier, if Bitcoin breaks into a new macro lower low and starts breaking below all of these important levels of support just here, back down towards the lower $30,000 prices, then in that case, that's when I would consider a possible bear market. But looking at everything on the chart right now, we simply have more signs of a bull market than a bear market. And just quickly taking a look at the S&P 500 index on the daily time frame, of course, the stock market is still pulling back to the downside in the shorter term. And obviously that is having a strong influence on the crypto prices being bearish. And I'll let you know that would probably be the case all the way back up here when we formed this bearish divergence in the stock market, saying that if we do play out that bearish divergence, it would negatively affect the crypto prices in the shorter term. So basically, if the stock market continues to pull back to the downside, then it would be very difficult for Bitcoin to flip extremely bullish again. But if the stock market can finally see a decent bounce to the upside, then that would really help out Bitcoin and the rest of the crypto market in bottoming out and potentially beginning the recovery back to the upside. And right now, from the all-time high down to the recent low in the S&P 500, it has pulled back just over 5% to the downside, which is nowhere near bear market territory. Because remember, part of the technical definition of a bear market is when the stock market pulls back around 20% to the downside or more. And if you want to get bonus crypto content and extra real-time updates throughout the day on the crypto markets, all completely for free, by the way, definitely make sure you follow me over on my Twitter. And the link to my Twitter account is in the description down below and also in the pinned comment. And if you enjoyed this video or got something valuable out of it, please make sure to leave a like down below. And if you're new to the channel, make sure to subscribe with notifications turned on for more updates just like this every single day. Make sure you're checking out one of these uploads if you haven't already. And as always, I really do appreciate all of your support in the channel at the moment. I can't thank you guys enough. But anyway, that is it for this video. I really hope you enjoyed, and I'll see you all in the next video.